in the near term, the Bitcoin price suffers pain from the deleveraging and from the collapse of other parts of the crypto ecosystem in the near term. So when UST collapsed, that wasn't good for Bitcoin, right? And if you have other tokens that collapse, then they're cross-collateralized with Bitcoin. So the failure or the collapse of a crypto hedge fund like Three Arrows, the failure or the collapse of a crypto bank like Celsius, and the collapse of a crypto token like Luna, all of these things are negatives in the near term. I think that the ideal stable coin that you want to hold is one that's backed by cash equivalents and they disclose the assets they have every week or every day. There are ETFs in the US market. Like someone says, okay, we're an ETF and we're going to own automobile companies. Well, they actually disclose the equity that they hold in the ETF routinely, and they're transparent about it. Like every time ARK, changes their holdings, you're reading about it. So that transparency builds confidence amongst investors. If they only disclosed once a year, much less confidence. If they never disclosed, right, not much confidence at all. So I think that you've got some stable coins that have more disclosures, right? On one end of the spectrum is Circle and Paxos, those kind of stable coins. They're kind of regulated entities in the US. They're one step below a bank. An FDIC approved bank would be one step higher, but they're one step down. So they have the least amount of uncertainty. Tether is, I think, regarded by many people as, a well-run, successful crypto venture, right? But they're not as transparent, right, with their holdings, and so that puts them in a second bucket. And they're being tested by the market, right? People are testing that because they will always test you, right? One of the advantages MicroStrategy has, right, is we disclose everything, right? You can read our 8Ks. So when trolls post negative things about us on Twitter, I can refer them to the 8Ks, and there's all the lawyers and all the accountants. And if you know anything about public companies, we sign Sarbanes-Oxley statements, and it makes the CFO and the CEO civilly and criminally liable for a misstatement, right? So lying when you're a public company is a big problem, right? Whereas if you're a private company or you never made the disclosures, you could say, well, I just didn't even know that was important, right? So I think that if you're a trader, right, we can't really sugarcoat it. If you're a trader and your time horizon is less than 12 months, and if a crypto exchange crashes, if a crypto hedge fund crashes, if a crypto token crashes, if a stable coin crashes, it's not good for the entire ecosystem. And Bitcoin is going to suffer from some of that volatility in the near term. But if you're a long-term holder investor, you would take the Warren Buffett approach, and you would say, well, if one of those crypto stable coins crashes and Bitcoin gets driven down, by a factor of 2, I'm a buyer. I'm just going to keep dollar cost averaging. It's a way for me to buy more, because every single month brings new information. And one of the pieces of information it brings is an understanding of the difference between a digital commodity versus a digital currency versus a digital security. And I think a lot of people got educated. For example, why is it a good idea that Bitcoin doesn't pay you yield, right? If you pay 20% yield, you have an inflating currency, it collapses. That's not a good idea. Also, if I paid you a yield, that probably makes you a security. And if it makes you a security, you're subject to SEC rules and securities laws. And that makes you not a very suitable asset to be a store of value or a treasury reserve asset for an institution. Gives you different accounting, gives you different risk parameters. So a lot of people didn't really think about, which of those things is safer. But I think now there's an entire world of people that would say, if I was holding Bitcoin, not getting yield, and I had self-custody, or if it was with a very conservative cold storage custodian, I would be in better shape than if I took my Bitcoin and I put it into a crypto bank to get yield, and they loaned it out to Three Arrows, and Three Arrows lost it, right? So what's the difference? Well, when you loan out Bitcoin to a crypto bank, you have that counterparty risk. When the bank loans out the Bitcoin to a hedge fund, you've got another counterparty risk. When the hedge fund invests in Luna, there's a crypto token risk. So we stacked 3 layers of counterparty risk on top of owning Bitcoin. And if each one of them is a 10% or 20% risk, it means every 3 years you get wiped out completely.
Yeah.
That's why I'll make this point. MicroStrategy was asked, are you going to get yield by loaning out your Bitcoin? And I said, no, we're not doing it because I might get a 6% yield, but if I take a 10% counterparty risk and once every 20 years the bank fails, my yield is negated. I didn't get anything. And
absolutely. Finally, someone says this.
One other thing is, like, we could have, we took a loan to value 25% and we paid like 3.5% spread. We could have got a loan to value 80% or 70% and paid nothing. If I had transferred the Bitcoin to a crypto bank, they would have given me a 50% loan to value loan for no interest. But the difference is, it's penny wise and pound foolish, because we wanted to keep custody of our Bitcoin. So when we took that,
the whole point of Bitcoin, right? I mean, that's the whole point of it.
But I mean, everybody's getting educated. So I won't. I don't really want to criticize someone that didn't know the difference. But if you think in a very sophisticated way about it, you would realize that if I'm willing to loan you money, if I gave you $200 million against your Bitcoin, but you were keeping the Bitcoin, that's a much safer relationship than if you gave me your Bitcoin and if you gave me 500 million of Bitcoin and I gave you the $200 million and then Bitcoin trades down and I sell your Bitcoin, you still owe me the money and the Bitcoin is gone, right? So they're not the same borrowing relationship. The catch is, if you're going to borrow money and keep your Bitcoin, you can only do it from a very well capitalized bank. And like Silvergate was an FDIC insured bank, and you have to pay a higher interest rate, and you have to borrow less loan to value. So, this is one of those examples where the easy path is the risky path. The better path is generally the more expensive path that's less risky over the long term, right? But less advantageous in the near term.
Yeah. I have never myself put my Bitcoin on any platform to gain a yield for this exact reason. For one point, laziness, and number two is, of course, I wanted to keep custody and ownership of my own Bitcoin.
This is an expensive lesson, but would you agree that there are millions of people that now are much more aware of the risks of an algorithmic stablecoin? They're more aware of the difference between any crypto token and Bitcoin. They're more aware of the risks of a crypto bank where you transfer your assets. And they realize that, the benefit of DeFi is, you can just move this money around, but the detriment is, they can take the money and you can get hacked, or, the bridge can fail, the protocol can fail, the bank can fail. And the advantage of no disclosure is you can go fast and break things. But the disadvantage of no disclosure is you can go fast and you can do stupid things, right? And so, like, when we make disclosures, people criticize us, right? Lots of criticism. Mm-hmm. But nobody was criticizing any of these things the week before or 2 weeks before they utterly crash and burn. And now you have a lot of people in the crypto industry saying, wow, I guess we need more disclosures.
Yeah.
Well, that's what Gary Gensler was saying too. But when the regulator says it, they're the big bad wolf. But when someone that just lost a lot of money says it, that's just rational. Now, of course, the right answer is we want enlightened disclosure regulation. It would be nice if it doesn't take 3 years and $30 million. It would be nice. Can we find a middle ground where people can find an efficient way to do things? Because I can't defend the status quo completely, because right now MicroStrategy stock, it only trades 9:30 in the morning till 4 in the afternoon, 5 days a week, and not on the holidays. And it hasn't changed for 30 years. I mean, since 1998, 24 years, no improvement in the way you can buy and sell MicroStrategy stock. So I'm not going to defend 24 years of the same. I am going to say it would be really good for the world if everybody's inspired by technology, and then they take the best of technology, the 24/7, 365 friction-free to 8 billion mobile devices, and then they apply common sense. If you're going to do something, if you're going to take a loan, make sure you're collateralized. If you're going to issue 10 billion, if you're going to borrow $10 billion from the general public, right? When you issue $10 billion of stablecoin, it's like borrowing 10 billion from the public. You should have at least $10 billion of something backing it at all times.